Good morning, traders from each and every part of the world that you're joining this series of the daily morning market call. My name is Kefa Eric, one of the market analysts here at HFM. HFM linking you to the global markets to access various financial assets. Now, we begin with our usual procedure of looking at the forces that have been moving the market, new developments that may continue moving the market in a particular direction or alter the market direction. We've defined that as fundamental analysis, which we will redefine again as the study of economic and geopolitical forces. But before we dive in, it's my pleasure to remind you that this is going to be a pre-recorded YouTube video, to mean that you could access this YouTube video at your own free time on our YouTube channel at HFM Kenya. Just search HFM Kenya. It will take you to our landing page. Like, subscribe, click on the notification button, and of course share so that it can improve on our algorithm and to help us reach more people. And it is our commitment to you that we shall be making more content that is of educative nature, with our sole aim being bridging the educational gap in the financial markets. Now, with that being said, we proceed swiftly. So, fundamental analysis: what has been moving the market? What is currently moving the market? So we have had two recent developments. The first one, in economic forces, we see the dollar gaining strength. This is from yesterday. Can be attributed to the adjustment made by the administration of Donald Trump in the United States. Which adjustments are these? The targeted tariffs on Asian imports, which has given a little bit of relief on America's stocks and by extension indices. And also the dollar has been strengthening, which can also be alluded to what we said yesterday, the optimism which is injected into the various assets by the investment of up to 1.4 trillion US dollars by the United Arab Emirates in the next 10 years of the United States government. This is quite strategic. This will possibly go beyond Donald Trump term. Having that in mind, I know out of curiosity somebody would ask, hey, wait, Kefa, why do we speak about fundamental analysis and focus mainly on the United States? It's not a focus on the United States, just much more attention of the United States. Allow me to use that phrase. The reason is the United States literally controls the supply chains of the world, controls the wealth of the world, with up to 24% of the global GDP being controlled from the states. So any adjustments they make, any tilts they make, alter financial markets. And our business as traders and investors is to understand these particular aspects for us to be able to determine market direction. So I'll move on to the charts to see the development of this as a continuation of yesterday's daily call. Very nice. Gold attempts to retrace, still holding on the area of interest that we alluded yesterday. And the retracement brought about by the strengthening of the US dollar, which can be seen clearly on the DXY, which is the dollar index, which measures the power of the US dollar against a basket of peer currencies. This slight retracement, but holding to the area of interest, as seen above, brought about by the strengthening of the US dollar from the forces that we spoke about yesterday. I'll repeat them. Force number one, the optimism brought about by the UOE investment in the United States, which is targeted for technology and infrastructure of up to 1.4 trillion US dollars. That's quite a huge amount. This is following the visit by United States officials in the United Arab Emirates state. Okay. And number two, optimism also brought about by political pressure on the Federal Open Market Committee, political pressure put by the Donald Trump administration on the Central Bank of the United States to adjust monetary policy. All right, this is coming in line with weakening United States economy that we have been experiencing at least in the first quarter, as we proceed in the first quarter of this year of 2025. All right, long positions would still be considered risk off approach on this asset gold, and short positions for scalpers and intraday traders would want to take advantage of counter trends. It is important to remember that what moves the market is the fundamental analysis, and as it stands, being long on gold would be considered a risk off approach, and being short a risk on approach. However the case, it is important to observe risk management and have in mind that geopolitical forces tend to move this commodity or precious metal, if you may like, more than other forces therein. On top of that, with gold, a little bit of optimism to the short traders. Traders who are considering to go in short also may be alluding the fact that we see Ukraine at giving positive signals to the United States envoy sent to try and navigate the Eastern Europe conflict between Ukraine and Russia, where we see Ukraine officials attempting to suggest they would have a complete ceasefire. Now, if this happens, this lowers the tension. But how long will this hold? Your answer is as good as mine. Not for long. And the reason we say this is because other escalating issues, other emerging issues, as states and countries pursue their personal interest or national interest, will emerge with time. It's just a matter of time, but we shall be monitoring this into the days to come. On stocks, US 100, composed of 40 to 50 US companies in the tech space, are showing a somewhat positive gesture, breaking above the area of interest, printing price to the upside. Yesterday, I believe we called this out for long positions, and this is brought about by the allegedly injection of 1.4 trillion from United States Arabic states, which is giving investors confidence to keep to invest in the US 100 or Nasdaq, if you may like. A little bit of snippet inside there. In a nutshell, the investment done by the United Arab Emirates will be leaning toward technologies. Now, US 100 is known to have the best 40, 50 alternating stocks which are technological in nature. This is giving investors and traders optimism, which is causing price to be in a bullish scenario, like we had said yesterday. Would like to monitor how long this goes and until it reaches the 21012.52 area of interest for us to observe the reaction from that area of interest, but in line with fundamental analysis. Remember, fundamental analysis coming together with technical analysis has somewhat a much more positive edge on the financial markets as compared to trading them individually. However, in the case you trade them individually, what is the nexus between fundamental traders and technical traders? Risk management. On S&P 500 or US 500, we see a similar scenario. Now, the US 500 or S&P 500 gives us a broader view of the economy of the United States, because here we have both major companies and also penny stocks, companies which are still attempting to grow, companies which are trying to establish their dominance. Now, this gives us an overview of all these companies, which you can see is attempting to be bullish, suggesting a recovering dollar. And a case we are also likely to see on US 30, similar scenario, which could be considered sunshine for United States strength and ascertain of its dominance in the global markets. On currencies, beginning with major pairs, GBP USD. We are still holding on this area of interest. Will the strengthening dollar break below this area of interest to stop the bullish trend that was attempting to establish? That is quite likely. The reason is the strengthening of the US dollar comes to the disadvantage of the Great British Pound, a scenario that we are likely to see on Euro USD also. Euro USD has actually moved a step ahead, reacting from this area of interest, attempting to go in for bearish scenario. For possible entries on areas of interest, it is important to wait for retracement so that we buy, we sell high for us to achieve a much what needed risk to reward, a profitable risk to reward, or nice risk to reward in that case. US oil has been attempting to change its character from the bearish scenario, attempting now to print bullish. We'll be monitoring this closely by looking at what the oil producing country projections are, and of course the meeting between the United States and the United Arabic Emirates would have a somewhat effect on the current trend. Remember, the United Arabic Emirates is seen as a core producer of petroleum and its products, so it affects with much more magnitude as compared to the various OPEC countries. On individual stocks, this is Tesla. We see that we opened with a gap that is today, printing price to the upside. Remember, this is the daily time frame, and this shows the reflection of individual stocks to group of stocks, a scenario that we're also likely to see on Apple, attempting to recover from the bearish trend that it had already established, giving us confidence to look for long positions in that regard for United States individual stocks, group of stocks, risk of approach on longs for gold, and currencies with the US dollar coming in second, or US dollar based currencies getting in for shorts. If this is your first time to have a conversation about the financial markets, consider getting to your mentor who has led you to this chat box, or logging searching hfm.com, attempt to register for an account, and you will get to a phrase where you put in your personal details, your contact details, beg your pardon, and you'll have our experts get in touch with you to help navigate there henceforth until it gets to the investment stage. As a disclaimer, this by any chance is not financial advice. This is purely meant for educational purposes. Until tomorrow, the same place, the same time, to do things the same way that has proven consistently profitable. God bless and take care. Paul, takuaji? Yeah.